Ladies and gentlemen, good day and welcome to Nitin Spinners Limited Q1 FY25 earnings conference call hosted by SMIFS Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Avnish Chandra from SMIFS Limited. Thank you and over to you, sir.
Limited, I welcome you all to Q1 FY25 earnings conference call of Nitin Spinners Limited. We are pleased to host the top management of the company. Today we have with us Mr. Dinesh Morikha, Promoter and Managing Director of the company, and Mr. P. Maheshwari, CFO of the company. We will start the call with initial commentary on results. Then we will open the floor for question and answer. Now I will hand over the call to the management. Mr. P. Maheshwari, CFO of the company. Over to you, Maheshwari, sir.
Thank you, Avnishji. Good afternoon and a warm welcome to all the participants to this Q1 FY22 earnings conference call of Nitin Spinners. I hope all of you have had a chance to look at our investor presentation that is uploaded on the company's website as well as stock exchanges. Before Sri Dineshji elaborate on present industry and business scenario, I am giving the brief financial highlights for the quarter ended 30th June 2024. Revenue for Q1 FY25 is rupees 803 crores against rupees 801 crore during Q4 FY24. That's the nominal increase. On year-on-year basis, revenue increased by 30% from rupees 617 crores in Q1 FY24 to rupees 803 crores during the quarter, reflecting increased turnover from expansion undertaken during the previous year. EBITDA for the quarter stood at rupees 118.80 crores as compared to rupees 116.24 crores in Q4 FY24 and rupees 76.10 crores in Q1 FY24. EBITDA margin for the quarter is 14.8% against previous quarter margins of 14.52% and Q1 FY24 margins of 12.33%. Profit after tax for the quarter is rupees 42.12 crores against rupees 39.17 crores in Q4 FY24. That's an increase of 7.5%. As compared to Q1 FY24, PAT has increased by 45.7% from rupees 28.90 crores to rupees 42.12 crores. EPS and cash EPS for the quarter is rupees 7.49 and rupees 14.02 per share respectively against Q1 FY24 EPS and cash EPS of rupees 5.14 and 9.24 per share respectively. That is all from my side. I now request Sri Dineshji to apprise about industry and business scenario.
Good afternoon. Regarding the industry, the textile industry is on the path to recovery with moderate improvement in demand in both domestic and export markets. While exports face challenges due to the ongoing Red Sea issues affecting the global supply chain and increasing logistic costs, a shift in sourcing preferences away from other countries has somewhat mitigated this impact for India. Indian cotton prices as such have stabilized, ranging between 55,000 to 60,000 rupees a candy, providing stability to our realizations and margins. However, during the same time, the international cotton prices in last 3 months have gone down by about 10 to 12%, which is a cause of concern for the Indian textile industry as imported cottons are becoming more competitive. Looking ahead, we expect the cotton prices to remain stable India as well as international market due to good crop conditions in around various countries and the anticipation of a good monsoon and crop in India as well. We also expect the utilization level across the industry to improve with gradual pickup in demand from various downstream segments of the industry. Coming on to the company's performance, we have shown a stable performance during Q1 FY25 and on account of improved utilization of assets and cost efficiency. Despite ongoing geopolitical challenges, realizations across our various business segments have improved due to better product mix and indicating a positive trend for our financial health. In the coming quarters, we aim to improve our position in key markets by focusing on optimization of product mixes, cost efficiencies, and utilization of capacities. Going forward, our strategic focus will be to capitalize on emerging opportunities to drive long-term growth, as well as investments in the renewable energy to ensure a sustainable growth. Our commitment to innovation, efficiency, and value additions remain unwavering as we navigate the evolving market landscape and continue to deliver to our stakeholders. I would now request to open the floor for the question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from Jatin Damania from Swan Investments. Please go ahead, sir.
Thank you, sir, for the opportunity. Good to see the improvement in the margin. Sir, in your opening remarks, you indicated that the international prices have dropped by 10 to 12%. And if I'm just looking at the numbers, the current international cotton prices are almost 20% discount to the domestic prices. So how shall one look at this comparison when we compare to a domestic industry and the spreads movement in the coming quarters?
First of all, means we need to align ourselves with what number we are in the international cotton prices, what number we are talking about. I think you are talking about the New York future prices.
Right.
So New York future is just a index, which is not actually the real cost. It is just an index on which there are certain additions which is happening depending upon the quality of the cotton and other costs involved. So then there is a benchmark called Cotlook Index. So where the similar kind of cottons are aggregated, the top 6 cottons are aggregated. So the better comparison would be doing at the Cotlook Index, which is the landed cost for any of the mills of our competitors or anyone. So at this point of time, if you see the landed cost of any, I mean basically let's not speak about landed cost, let's speak about the X factories, X cost of any of the countries. There is a difference of about 7 to 8%. Means the US cotton or the Australian cotton or the Brazil cotton, which are the larger producers of cotton, are about 10% cheaper than our normal this thing. So we have to consider accordingly that they are about international cottons are about 10% cheaper, and in the case of landed cost, they are more or less at par.
Okay, so that means you don't see any major impact in terms of the spread as far as the cotton yarn spreads are concerned.
At this point of time, nothing major is happening. But if we consistently, let's say today we are slightly below par. The Indian cotton is slightly expensive than the imported cotton. And that is primarily due to the announcement of the minimum support price by the government. And then there was a sudden spike in the cotton prices. Otherwise, we were running more or less at parity with the international cotton.
Right. And so secondly, now if you look on the sequential basis, we have been able to report an improvement in the margins, though marginally because of various product mix and cost optimization. Now, on the revenue front, given our current capacity, we are already operating at the rated capacity. So definitely growth prospects on the revenue front is not there. But what are the levers there levers are in place to improve the margin from the current level?
First of all, we can slightly grow in the revenue side as well. If you see our numbers, we have not been able to ship out the total amount of quantity what we have produced in this particular quarter due to logistic concerns, non-availability of the containers and other things. So slight revenue improvement is definitely possible from there. So we expect that to happen going forward. As far as margins are concerned, the major improvement in margin will come from the price improvement side. On the cost efficiency side, the margin improvement will not be that much since we are already optimizing and we are keeping on optimizing basically our operations. So the major kicker will come only when there is better demand and there is a better realization. Of course, with better product mixes, it can help, but major improvement will come from there only.
Right. And in terms of our solar energy, has there been any benefit or probably that will come in the end of this financial year?
So already we are having solar capacity, so that is already accruing to us continuously. So and it is pretty good in the summer season. You can see our energy cost has, in comparison to last quarter, has come down only. So that is a credit to the solar energy which we are using. So additional capacity which we are going to put in, that of course that will kick in by the end of this financial year only.
Okay. And so last question, as you discussed in the previous call regarding the scope to increase the capacity in the fabric segment, have we finalized any CapEx guidelines for the future growth drivers?
We have not yet finalized any CapEx guidelines. As soon as we are ready with this, we are evaluating various avenues in this particular thing, in various segments of our business as well as outside our business segment. So once we are ready with that, we will definitely come back to you.
Sure, sir. That's all from my side. Thank you and all the best.
Thank you.
Thank you. The next question is from Manish Oswal from Nirmal Bang Security Private Limited. Please go ahead, sir.
Yes, thank you for the opportunity, sir. My question on our next phase of CapEx plan, what is the update when we planning to announce the new capacity in our business given the current utilization and the capacity?
Basically, I just now answered that question as such. We are in that is work in process. We are working out the various avenues where we can allocate our additional, where we can allocate our capital going forward. So we'll come back to you shortly as soon as we are ready with this. It's a very dynamic situation at this moment. So we are working out the best possible options and then we'll come back.
Or will it be very similar to the last CapEx size or it will be higher or lower than that?
Cannot comment on that particular part. Once it is ready, we'll come back. We'll come with all the details. I don't want to give a half-baked answer.
Sure. And the second thing, sir, we have now given the current the situation of the international cotton and the domestic thing. So your margin outlook remain. We can sustain the current margin, or we can further improve. What is our outlook out there?
Last part of your question was means sustain or what you want to say?
Or we can improve, sir.
Basically, at this point of time, we are looking to sustain the margins. That is our first priority. As I answered in our first question itself, that margins improvement from here will depend on the demand situation. If the downstream demand situation improves and we are able to have better realization, that will only be the major kicker for the improvement in the margins from here.
And lastly, from your remarks in the presentation, you said in remarks that you anticipate a better demand situation in the coming quarters. And the second comment was more focus on the value-added segment. So can we presume then the new capex will be focused on the more on the value addition aspect of the business?
Definitely, but we have to evaluate how much capital we have to allocate and the return on the investments on that part as well. So value addition is important, but we need to put in how much money we are allocating to that and what is the returns on the same. So we are working out everything. So we want to come up with a firm plan. So there only I will be able to answer this future capex part of it.
And lastly, on the US and the Europe market, can you comment on the qualitative or the quantity terms in terms of demand trend vis-a-vis last 6 months to currently? So what has changed? If you give the qualitative or quantitatively, what was comfortable to you?
Like as far as the demand in the Europe as well as in the US, I think already the worst part is over. Demand is now slowly picking up. And we were seeing a reasonably good demand before this Red Sea crisis happened. In fact, due to the Red Sea crisis and increase in the transit time, the European demand has increased. But later on, the sea freight cost has increased substantially in last 2-3 months due to certain changes in the policies of the US government, and a lot of material was being shipped from China to USA. So I think that will normalize in another 1 or 2 months. So once that has increased the cost of the sea freight and ultimately the cost of the product to the customers. So I think that is still getting absorbed by them. So we expect the demand will come up going forward, as I would say the retail pipeline is quite empty at the moment. They are not carrying huge inventory, and that will actually aid the demand going forward in the festive season as well as the coming seasons of this balance season of this year.
Sure, sir. Thank you very much for answering all my questions. I appreciate it. Thank you.
Thank you, sir. The next question is from the line of Rishabh Gang from Sacheti Family Office. Please go ahead, sir.
Thank you for the opportunity. Good set of numbers. But I wanted to understand what were the key drivers, right, for in case you have mentioned it, can you just repeat a bit again? What are the key drivers of why our EBITDA margin has improved? And so earlier we have had EBITDA margins of 25%.
Hello, sir. Sorry to interrupt. Your voice is not clear.
Is it clear now?
No, sir. Are you speaking from your handset?
Yeah. Is it clear now?
No, sir.
Hello?
Yeah, it's clear now.
Yeah.
Yeah.
So, okay, so I wanted to understand what are the key drivers, right, which have caused the increase in the EBITDA margin right now. And earlier we used to have an EBITDA margin of 20-25% in one specific year. So what were the key drivers which led to that kind of EBITDA margin in historical years? And can you just explain on that?
I think the margin improvement, EBITDA margin improvement is very, very small. Since we have increased only 25 bits, that is a very small improvement. Given we have just commercialized our plants and optimum utilization of those capacities, that kind of improvement comes automatically. There is nothing more to speak on that particular part. If we see sequential margin improvement from last quarter to this quarter. Coming to your second part of the question, where you said that we had a 20-25% EBITDA margin. That was only, I think, once in 2021-22, and that was an extraordinary situation where the demand was very good, and accordingly the prices were driven all around the world. So this is similar thing. What I have been speaking right now is that then margin improvement from here will happen. Then there is an improvement in the demand. When the downstream demand improves, and then there is a possibility to increase our realizations and margin.
So I understand that the same realization improves and then the EBITDA margin improves. So what causes the realization to improve? Like, is it on the basis of increase in the cotton prices that leads to higher margin? How does the relation work?
No, it is not related with cotton prices. Rather, when cotton prices are lesser, that is our raw material, we get better margins. It is the demand of the final product that is very important. If the demand of the final, if there is a demand good demand all around, then then we are able to increase our prices to a better levels, and that leads to better margins. When there is a subdued demand, which has happened in last few years due to various geopolitical situations all around the world, so that has actually resulted in a lower margin.
So the impact of the inventory gain is not so much in getting huge EBITDA margins, right?
Impact of? Pardon?
Impact of inventory gains.
No, not means if you see the historically our company, we have never been keeping an extraordinary inventory. If you analyze the thing that we normally are running with a reasonable inventory, and that we have a stated policy that we go as per our demand only. If the demand is more, then only if we sell more, then we keep more inventories. If we sell longer, then we keep more inventories. So it is not something which is related with the inventories, at least for us.
All right, got it. Also, sir, on the EBITDA, can you just give some idea on what are the EBITDA margins across product categories and how does it vary across domestic and export sales?
Hello, Rishabh, you're losing your audio.
Yeah, am I audible now?
No, please use your handset.
No, I'm using my handset only. Hello.
Hello.
We are
not sharing our EBITDA margin across the various divisions and various products.
No, that's fine. Can you just share some directional idea on that?
So, I think that is something like asking the question the other way around. So you would prefer I would prefer to avoid answering that. Yeah.
Thank you so much, sir.
Hello.
Yeah, thank you. Thank you.
Yeah, thank you.
Thank you, sir. The next question is from the line of Akshay Kothari from JHP Security. Please go ahead, sir.
For the opportunity, so just one question. How have we seen some improvement in demand from China?
No, sir. No improvement in demand from China. It is as it is. It is rather stable. The demand has been rather, if you compare with previous years, it is on the lower side only.
And do we expect it to come back, or any inputs you are getting from the industry as such?
I think what we have been able to understand that they have majorly shifted their production capabilities towards synthetic manufacturing. So since they have a lesser cotton production, and accordingly also a lot of restrictions have come on the Chinese products when they sell to US and Europe. So there they have tried to reduce the production itself and have imported raw cottons from US or other countries so as to support that. So overall, cotton textile overall has gone down only in China. So that has, and synthetics have increased in China. So that is why their imports towards cotton as well as cotton yarn has not improved substantially in last 1 year or so.
And so secondly, on a more structural sort of thing that everyone knows that, MMF to cotton ratio globally is in favor of MMF of around 70:30, and in India it's reversed. But, due to global warming and hotter climate, are we seeing internationally that cotton consumption is increasing as such, and this ratio may more be, the cotton would grow faster than the MMF going forward?
Actually, if you see the consumption pattern, what we have, the kind of cotton consumption which we had seen in last 3-4 years, it is increasing only. The pace is about 2 to 3%. But the main reason for the lower increase in consumption was the raw material prices. We had a very high prices 2 years back, which actually restricted and moved some of the consumption towards the synthetic side. That is again with the reasonable prices coming in the international market as well as in domestic market. So the consumption is again moving towards cotton, but we are not seeing that it is growing more than synthetics. I think it is retaining its shares. That is all at the moment. In India, of course, we are not yet to see the reversal or reduction in the cotton consumption. The cotton part of it in the ratio is still to change.
Okay. Thanks a lot, sir. Thanks.
Thank you, sir. The next question is from Harshil Mehta from Mehta Vakil and Company.
Good afternoon, sir. Thanks for taking my question. So there have been some reports lately that the Red Sea crisis and subsequent container shortages have impacted textile exports from India. This has led to an inventory pile-up with Indian textile manufacturers, and that report stated that some of this demand has shifted to China consequently. Have we been seeing something along similar lines? What are your thoughts on this? Is there any truth to this report?
First of all, that is your first part of your report is perfectly all right. That there is a shortage of containers and there is a stock pile-up depending on product to product with the Indian suppliers. But this moving towards China is not at all right, because China is also facing the similar problem and rather more acute problem. China, as you must be aware, on the EV batteries, USA has imposed a very heavy anti-dumping duty from 1st of August. So all the goods from which are of this product was to be moved in from China to US. And that has resulted in container shortages because they were paying very, very heavy cost for that movement. I think that part is nearly over now, and we should be seeing a normalized kind of situation. Red Sea crisis, we were able to navigate the Red Sea crisis reasonably. But this particular part of extraordinary movement from China to US was for a very short-term period. So at that point of time, Indian ships were lesser, and we had an issue in that part. Now, going forward, no movement as such from India towards China. That I can confirm.
Okay. And just as a follow-up, sir, so in case, these export difficulties continue for a while longer in case of container shortages, etc., are we trying to increase our penetration in the domestic market? Because I believe our export to domestic ratio has increased a little further this quarter as well. So any plans to kind of focus a little more on domestic to kind of overcome these export difficulties?
Yeah, we can do it two ways, that we can spread our export business towards more countries. So that can mitigate this effect and reduce our concentration on some particular countries, and also increase in the domestic market. So we are focusing on both the sides. And we are also trying to see that our goods are shipped out in time as well. Because since it's an industrial product, it must reach to our customers also on time, so that his production is also not hampered.
Right. That's all from my side, sir. Thank you.
Thank you, sir. The next question is from the line of Darshil Javeri from Crown Capital. Please go ahead, sir.
Hello. Hi. Good afternoon, sir. Thank you so much for taking my question. So hope I'm audible.
Yeah, you're audible.
Yeah. Hi, sir. So just wanted to get a bit of sense from you that in terms of our revenue currently, I think we are at our optimum, capacity utilization. So what kind of revenue could we, maybe target for FY25? Would our quarterly numbers be in the steady range of 800 CR, or would there be, maybe slight upward movement?
We should see slight upward movements. If you see our production capabilities, our fabric division has not produced the kind of quantities which
Hello.
Yes, sir.
Yeah, I'm sorry. Have I lost the line for the management, or I can't hear them?
Thank you for patiently waiting. We have the management team back on call.
Yes. Can you hear me?
Yeah. Hi, sir. Yeah. Sorry, sir, you got cut.
Yeah.
Yeah. So just like with regards to revenue, you were just saying that, maybe
slight improvement is possible from here. Since our fabric division was not optimally running in the last quarter. So we can have the possibility to improve upon there. And also some small pile-up can further aid to our revenue going forward.
Oh, okay. But on a normalized, so just wanted to ask sir that is like a 4,000 crore top line possible?